Well, another group that has previously called out the future made in Australia policy is Deloitte Access Economics. But today, its latest forecasts on the economy are more in line with government thinking, mainly that the inflation is easing, the economy is slowing, and the Reserve Bank doesn't need to raise interest rates again. It goes as far as saying that rate rises would be counterproductive to the Stage 3 tax cuts, the benefit of which are now only just being felt. Well, Stephen Smith is the head of macroeconomic policy and forecasting at Access Economics and joins me now. Stephen, always good to chat to you. I want to go to one quote that you've got here, and that is looking at housing shortage, pushing up rents, looking at a range of other things. None of this sort of inflation will be tamed by higher interest rates. Is that meaning we don't need higher rates right now?
Ross, that's our view. We don't think interest rates should increase any further from here. You mentioned at the top of the show the June quarter CPI print next week will be absolutely crucial for the deliberations of the Reserve Bank. But in our view, a lot of the remaining inflation that's sitting in the Australian economy is more sort of backwards-looking inflation. It's driven by supply challenges, things like housing, like you mentioned. A rate rise will only make the housing crisis worse. It'll only contribute to even higher rents. And so we do think it would be counterproductive for the RBA to raise rates when it meets on the 5th and 6th of August.
Gee, I'll tell you what, you've changed your tune. The Treasurer wasn't happy with you a short time ago when you were criticising the future made in Australia policy. Now you're right in his good book saying we don't need interest rate rises.
Well, to be honest, Ross, we don't sort of, wax and wane too much based on what the Treasurer says or the Treasurer thinks. We kind of call it as it is, and stand by those comments on future made in Australia. And also, we've been for quite some time, suggesting that interest rates didn't need to rise as far as they have in Australia. It was always, partly a supply and partly a demand story, and very clearly, interest rates in Australia are restrictive. We're seeing households under enormous pressure, consumer spending really just limping along, and housing construction activity in the doldrums. So a further rate rise, isn't needed in terms of sort of crushing demand even further in the economy. And so we think the RBA should hold pat, even if it is, an upside surprise for the June quarter inflation data next week.
The interesting phase is that many people say that the Reserve Bank in particular has tried to glide Australia's economy down, basically allowing inflation to stay above that 2 to 3% band, in the idea that it can hold more jobs, more people in jobs in our economy, which is a noble ambition. The question is, many suggest that this has never ever worked anywhere else in the world, and why should it work here now?
Well, it is a noble ambition, and to date, Ross, I mean, that's exactly what we've seen happen. The unemployment rate went to historic lows after the pandemic, and it's creeping up. We are concerned that it will reach sort of rates that are a little bit higher than what the RBA is thinking. They've got 4.2% at the end of this calendar year. We think it'll look more like 4.5%, given we're already at 4.1. And so, further rate hike puts that even more at risk. It's a noble ambition, and I think the RBA should deserves credit for trying to pursue it. A lot of people that are calling for interest rate hikes from here are talking about too much demand in the economy. We just can't see that. We can't see the evidence for that, and so we don't think that interest rate hikes from here will help. And in fact, if you're an Australian household, you would have been looking forward to 1 July. That finally rolls around, those Stage 3 tax cuts that everyone has been sort of looking forward to. They've been talked about for 5 years. They were revamped, and now everyone gets them, as well as energy bill relief, as well as some real wage gains finally. You would have really been looking forward to 1 July. That's ticked around, and for the RBA to snatch that away in early August, I think would be quite heartbreaking for Australian families.
The other little thing you've suggested is that the Reserve Bank's been playing chicken with some of these inflation numbers coming in higher than expected. Are they going to have to do that again in this next quarter, do you imagine?
Look, they may. They sort of did create a little bit of a rod for their own back in some respects with their tough talk earlier on, talking about having a very low tolerance for inflation surprises, making sure they would do whatever it takes to get inflation back down. Over the past few months, we've seen some, we've described them as less than perfect inflation numbers. They've been a little hotter than expected. And the RBA has kind of stared down those numbers. They may need to do that again in June. Really, the trick for June, we think, is probably the threshold of about 1%. If the core inflation figure for June is above 1%, that really puts a rate rise in play. Below 1%, we think the RBA would be relatively comfortable with that. And so, yes, but they may need to stare down another less than perfect inflation number, but we certainly think they should. And we look forward to that data next week.
I tell you what, it's going to be fascinating just to watch that. Stephen Smith from Deloitte Access Economics, many thanks for your time today. And I do note you say there's a fork in the road. Well, they've got a big decision to make, no doubt, in the next week or so. Thanks for your time.
Thanks, Ross.